Number one, economic and stock market risks. We have been witnessing a huge amount of change going on in the economic landscape. Now, yes, there has been some, inflation starting to creep back up, but now I'm actually starting to think the Federal Reserve wants this. And here's the reasoning for that. The last meeting, Jay Powell, our Federal Reserve Chairman, came out and gave what we call a dovish stance, meaning he wants to loosen our financial conditions. And while that would be harmful, especially for inflation, it may actually be just the thing that they need to do. Now, here's the thought process. The Federal Reserve, their priority right now is to make sure that we can be fighting inflation, but also make sure that the government is solvent. So the Treasury Department is issuing bonds to fund our government and a lot of the deficit spending that we're doing, and the Federal Reserve needs to make sure that we can service that debt and that we are able to find not only a buyer of our bonds, but also that we are able to have a good interest rate. And because of the fact that all last year our borrowing costs went up, just because of our deficit spending, now we're in a point in time where we need to start decreasing interest rates just to keep up with our debt load. So even though inflation is not tame yet, and actually most likely will start to increase, that may be the only thing that the Federal Reserve is able to do. So here are the options then. When it comes to this, we have higher inflation, yes, but if we start to lower interest rates and if we loosen conditions, that also means that we have growth most likely in our economy. So right now we can see growth happening in our economy, but also the world's economy. And that could mean a very significant change in the environment, not only now, but through the next, most likely, 6 to 8 months that we'll see this happen. Number two, portfolio changes. Yes, there are a lot of items out there with respect to inflation and growth that we're looking at, especially when it comes to a lead to scenario where we have inflation and we have growth, especially growth around the world. So items that work well, especially in your portfolio, investments that work well are in financials, industrials, energy in this time period, in this way that we're growing. Those all tend to work well right now. Now, that's not saying that they have to be working, but when we are in a lead to scenario, we do what's called a back test and we see what performs the best. Now, those are what we call cyclical type of investments, one that perform well when the economy is doing well. So when we take a look at those are ones that are generally going to be working better and ones that we're actually adding into the portfolios because right now we're starting to see the outperformance that they are providing. Well, yes, then we start to add in others like materials. So think copper, think steel, think just the nature for the industrial growth that we need. But also, when we take a look at the different investments from around the world, we can start to add in places like Europe, especially since the majority of Europe is coming out of a manufacturing recession. Well, the same then is true for emerging markets, and especially China. Well, we don't need to necessarily be invested into China, and I've said this before that we can be invested into other areas, and one of those great areas is South Korea. So we have South Korea that we can be invested into, the Philippines. All of these are tied to some of the growth that happens in China. So when we take a look at everything, now we're starting to see what we call a broadening of all of the different areas that we can be invested. So no longer is it just technology. Now we have ones that are tied to the economy, and those are going to be great places to be invested going forward. So that's where we are looking to increase and also maintain parts of our portfolio. Number three, wealth management and advanced planning. You know, when we take a look at the ways that we can be working with your accounts, we take a look at the ever-evolving type of wealth preservation that is out there and trying to take a look at the strategic options that you have for your wealth. Now in 2024, we take a look now at taxes. Last year's taxes are done. Last year's taxes are over, and you may have even paid your taxes. But how can we mitigate taxes this year? And especially with some of your stock. That's what we're going to be talking a little bit about today. Now, yes, with all the different changes of capital gains over the years, with all the changes of how much we can be taking to affect your overall bracket, that's what we really want to be focused on. So when we take a look at some of the different strategies, we want to make sure they align to what you want. Now, first strategy is just a very basic one. It looks at what we call bracket management. And so when we take a look at where you're at in your overall tax bracket, we can figure out if we should sell more and have more capital gains to come up to the top end of that bracket. Now, we really don't want to go into a new bracket if we don't have to, but this may be a very good strategy to fill the bracket that you're in. While other strategies then come down to income and doing some strategic income planning. So yes, we could be selling some of your appreciated stock, but maybe we need some income, and maybe we can actually earn some higher interest and dividends on that as well. So we take a look at the rates that are out there. We take a look at your salary or pension, Social Security, and other income that we have coming in, and maybe we can actually be putting in more dividend pairs and also some very specific strategies that actually can pay higher dividends and interest just based upon some unique factors with options. So yes, there's another element to this that you can be looking at as well, but it comes back down to the bracket that you're in and possibly how we can be utilizing that. Well, another element then comes back to the capital gains, and especially your long-term capital gains, because those are at different elements with respect to how we can be treating the long-term gains at a lower price. So either the 0% long-term capital gains bracket, the 15% long-term capital gains bracket, or the 20%. So even if we need to sell some, that may actually be to your benefit. But if we harvest losses with that, so now we can say if we have a loss, especially a prior loss that we have a carry forward, or if we are having other investments that already have a loss, then we can start to offset some of those gains against your losses. And if we have more losses, we can take up to $3,000 off of your tax return as well. So there's a lot to be working with gains and losses, especially when we need to sell. Now the last element are for very specific ways we can be looking at selling stock, especially for corporations and business owners. Now when we take a look at ones that are called the ESBT and the QSST, these are all different types of ways we can be looking to sell corporate related stocks, and we can be looking at how we can be using trusts to sell the stock as well. So this helps to limit the amount of income that would come to your personal taxes. And when we optimize them, when we optimize your strategy, then we can really start to look at what we call strategic tax planning. Now, this is not necessarily something that's saying that we are going to be making absolute recommendations, but we can take a look at the ways that we can be working with your CPA. We can be working with all the different advisors that speak into your financial life and find the best path forward for your stocks and how we can sell them to have the least amount of tax impact. And that makes for some very good planning. Number 4, our second opinion. As we are talking a lot today, you may have some questions about your overall wealth plan, or you actually may know someone who does as well. Now, what we are offering just for watching this video is a second opinion on your overall wealth plan to talk through some of your highly appreciated stock that you may want to sell in the future, to talk through your portfolio and ways that we could be optimizing it. But here's what we do. We go through what we call a discovery meeting, and we take a look at where you're at today. Then we take a look at where you want to go in the future. And we look at all of the different strategies, ideas, and ways to make that happen. Now, there may be some gaps in the plan, and we will help to address them and to tell you where we can be working to improve your overall plan. But either way, you'll go away knowing you are putting yourself into a better financial position just by closing some of those gaps than when you started. So with that, as you want to go through and have a second opinion on your overall wealth plan, please click the link below and we'd be happy to talk. With that, have a great day and we hope to hear from you soon. Take care.